Good day traders, in today's video I'll be talking about the ATR indicator, that is the average true range indicator, and how you can use it to set or place an ideal stop loss. Sometime in the market and you place a stop loss that is too tight, the market can just go against you a little bit and take your stop loss out, and it will go in the same direction you predicted. So to avoid this, you have to place what I call an ideal stop loss so that you don't experience stop loss hunts. So all of those in this video. If you're not subscribed to the channel, help subscribe to the channel, hit that like button and turn on the notification bell. Ensure you leave a like for this video. Alright, so I go to advanced here. Remember, on Binance, and then right here I go down, and then this is my chart right here, still loading, but I have to put it on full screen. So right here I have the ATR indicator here, so I will remove the ATR indicator from my chart right here, and then I have to go and look for the indicator right here, technical indicator. Then I have to search for the ATR and the search button. Then right here you see the average true range. Now, one thing you have to understand is that the average true range indicator is not a momentum indicator, it's a volatility indicator. So it shows volatility in the market. Let's say, for example, if it was here and you have a momentum indicator, you're supposed to short here because you consider this area as overbought condition, and the market goes down. Because as the market go right down together with the indicator, you see the market was not actually going down. After some time the market move up, so you would have been stopped out around this area if you short the market right here, right after the close of this very candle. The same thing here, if you try to long the market around here, maybe you say this was at oversold condition and you want to long the market right here, you see you could have stopped out as well. Maybe you're using the momentum perspective. But the ATR indicator is not a momentum indicator, it's a volatility indicator. That means it shows volatility in the market. So now you can go here, say format, and then you go to style, and then I can increase the visibility of your ATR indicator. We just click OK. Then if you look at this setting as well, this format, and then you go to inputs, you see 14. Now this is the default setting, this is 14. Now it shows the average of the last 14 candles of a particular or specific cryptocurrency asset in respect to a particular time frame. In this case we're using the 1 hour charts. Okay, so all you need to do now is to apply the ATR indicator wisely using what I'm going to show you right now. All you need to do to set a specific and ideal stop loss is to use the ATR. Let's say, for example, I want to enter this trade. That means I want to short this very particular market after the formation of this candle. All I need to do is to take the ATR number, and where you can find the ATR number is here. So as I place it on this very candle and you look at this area, you see the ATR number display here. Remember, we are talking about 14 period, so that's why you see 14 here. Okay, that means it calculates the last price of 14 candles backward. Now at this very area I need to take this number times 2, and then I will add it to the opening price of this very candle. That will give me where my ID stop supposed to be. Okay, so let's go into this very simple calculation right now. So I need to bring up my calculator. So right here, if I want to enter this trade here, this way I want to enter this trade at the close of this very candle, okay, then I want to take this very price. So the ATR here is 439.71. So I have here 439. We have 0.71 times 2 times 2. So you have this. Okay, now I have to add this number with the opening price of this very candle. This is the opening price in case of a bearish candle. I have to add it to the opening price here. Remember, market was going down. I want to short the market, and then this candle have formed. It has fully formed. So I have to add it with the price here, which is 43.90. So I have here plus 43.90. And then you see the value here. This is the value. This is 41269.42. So my ideal stop now will be this very value, which is around this area. Which is around this area, 40269. Okay, this is this area. Okay, so I can simply go and can put there, and then I'll then shift this to this level. Okay, around this area, this is where my stop loss need to be. So if I'm using this, let me remove this for a moment. So if I'm using this, let's say I'm shorting the market in this case, and then this is where it should be. So this should be down. We have 1, 2. This around this level. I can't remember the figure again, but that is around 4265. Okay, so this is the stop loss, and then my take profit target is at least 1-to-1 risk reward ratio. And then if, for example, I'm using 1-to-2, see, you see that it will give us a very nice, profit target. So if the market could turn, if the market is turning, that is, the market is going against us, you will see that it will definitely go in this direction. Let it not be that the market is going up and it hits our stop loss out and still go in a predicted direction. It is very bad. Okay, so when you set your stop loss in this way, we call this an ideal stop. Now you're using the ATR indicator that measures volatility in the market to set your stop loss target. So in this case, you are not guessing what is going to happen. That is that for this very example. Now I can look at another example here. Okay, let's say in this case I want to enter a trade here. You see the market go down with this momentum. This was a retracement. So if the market go down from here to this very point and then retrace back, this was a retracement. After retracement, we should have an impulse. Very correct. Now, at this point here, we see the market with this very bearish candle. We say the market is trying to go right down, and the market does. So if we were to enter the trade after the formation of this very candle, so we're going to check the ATR value of this very candlestick at this very area, and then we multiply it by 2. Then we're going to add it with the opening price of this very candle. So let's do the calculation once more. So I'll go here, and then I'll bring up my calculator again. Then here I have the ATR value. If I place it on this very candlestick, the ATR value is 431. So I will do 431 times 2, and then it will give me the value. Then I will add this with the opening price of this very bearish candle, which is 39,510. So we have here, I'll add it, say 39,510. Okay, now this is 4372. So I will look for 4372 here. 4372. So you see, this is where your stop loss is supposed to be. This is 4372 around this area. Okay, this around this area. This is where your stop loss is supposed to be after you enter the trade at the close of this very candle. So if I remove this, then I pick this out. So this is my entry, and my stop loss at this level. Okay, so you see this, the markets, even though there is a flip, if there's a whipsaw around here, that is, if there's a spike, it won't just spike and come to this very level where you set your stop loss. If it does, then probably the market is going to turn and go in this very direction. Not that the market is going to stop you out around this area and the market is going to go in a direction. So when most baby traders trade, they will, instead of using a very sound and ideal stop loss, they're going to place their stop loss around this area, and they get stopped out easily. Because what happens when you place a stop loss around this area, let's say for example you enter here and you place a stop loss here, this very yellow line here that I just draw on my chart, if there is a spike out in the market, it will easily hit your stop loss here and take you out, and market will still go in this your predicted direction. But when you set an ideal stop in this very way, it will make it easy for you to be in the market, even though market is going against you a little bit, and then it will still go in your direction. So in this case, if I move a little bit this, if I'm looking at 1-to-1 risk reward ratio, you see I will always have my 1-to-1 risk reward ratio. It's a very sound and perfect strategy to set your stop loss. Only stop loss setting an entry of your very targets of the specific markets you are trading. In this case, I'm looking at BTC USD chart. So if you look at here and I want 1-to-1 risk reward ratio, you see I still have my 1-to-1 risk reward ratio here. So this is my entry, my stop loss, and then my take profit target. So this is for downtrend, that is bearish market, when you want to short the market. Now let me do another example when you want to long the market around this area. Now it is this very area here. You see the market here, this very market here goes up. So let's say, for example, you see the market here go right up, and then here we see a little bit of consolidation, and the ATR was right down here, signifying there was a low volatility around this area. Then we see this very candlestick. You see this was a closing price reversal candle around this area, and then we see this candle close above every other candle around here, okay, which signifies that the volatility is a little bit much with this very candlestick after this very consolidation. Remember, what you need to do here to have an ideal stop loss here is you have to look for the ATR by taking this number here. You see, if I place this here, there's a number that appears here. So if I place this here, you see 420.32. that is the ATR value of this very candlestick. Remember, I'm looking at the 1 hour chart. So if I place here, I will see 420.32. okay, so what I need to do now is to pick my calculator. Then I will do 420.32 times 2. So this is the value I have now. Since you have this value now, you will subtract this value from the opening price of this very candle, or you minus the opening price of this candle from this value. Okay, so you are doing subtraction here. In the case of a bearish market where we want to short the market, we are doing addition, but in this case we are doing subtraction. So you subtract this value from the opening price here, or do you subtract the opening price from this. If you have a negative value, neglect the negative value. Okay, so in this case I have to subtract this very value here, which is what is reflecting on my price here, and I have the value here, which is, this is 35,740. so I have to subtract 35,740 from this number. So what I have here is 34,899. so I will look for 34,899 here. So this was around this area. Okay, this was where I supposed to place my stop loss. Remember, this is a little bit close, but even though you place this stop loss here, you don't need to worry much. You're supposed not to hit your ass. So if I go here and I place a long position, this was my entry, and this is my stop loss, this area. Okay, this is my stop loss. You see, I will have to make a little bit of profit here, even though I was taking 1-to-1 risk reward ratio. You see, my target will be hit as fast as possible. And then if I'm using 1-to-2 risk reward ratio, like we always advise in Remit Trade Academy, don't go too way high, like you're looking at 1-to-4 when you are day trading. You look at 1-to-2, 1-to-3, that is okay. So even though you're looking at 1-to-2 risk reward ratio here, you see, if you risk this much from this area, from your entry here to your stop loss is your risk, and then from your entry to your take profit target is your profit. So if you look at this very well, if you enter here, the market is supposed to go right way in your favor, and you wouldn't have been stopped out in this very example. Now, if you were not here during the formation of this very candle, and you want to use, let's say you want to use this very breakout candlestick, this candlestick breakout, and it gives a very significant move. The same thing you will do, you find the ATR value of this very candle from here, and then you multiply it by 2, and then you subtract it from the opening price here. So if we do that here, I'll go and take my calculator. So the ATR value of this very candlestick is 478. So we have 478 here, multiplied by 2. We have this value. Then here was the opening price, which is 36,040. So we have minus 36,040. Okay, so we have 35,084 as the value where you have to place your stop loss. So this is the price right here. So if I figure out the price right here, we have 35,084. Okay, so this was around this area. Okay, remember you are entering here. This you are entering. You are entering at the close of this very candle, but you are using the opening to do your calculation together with your ATR value. So if I should use my short indication, so this was the area, and then this is the value right here. Go here, and I pick this from here to this point. Go down a little bit. So let's take this as our stop loss. So our stop loss is supposed to be from here to this point. So our stop loss is supposed to be this level, and then our take profit targets, if it's 1 to 1.5 or 1 to 2, you see we suppose have a decent profit as well when we are using, even though it's 1 to 2 risk reward ratio, our take profit target suppose hit as well. So if you use this very way of setting an ideal stop loss, you won't get problem of stop loss hunting. It's a very perfect way to set an ideal stop loss in the market. Remember, the part 2 of this very video will follow immediately after this very particular video. So thank you very much guys for watching to this video. Like I said earlier, if you've not registered on Binance, check the link in the description and do your registration. Then if you want to learn how to trade cryptocurrency profitably and successfully, you have to enroll for the Remit Trade Academy cryptocurrency course and mentorship program. So you check the description as well, you see WhatsApp contacts and reach us immediately and learn how to trade. There is a program that we'll call the Learn and Earn program. So get into class with me and know how to trade profitably and successfully from the comfort of your home. So thank you very much guys for watching today's video, and I will see you in the next video.